Hello friends, we have seen today the circuits were touched in the stock market and it was paused for 45 minutes and it resumed. The fall was 3000 points in Sensex, but it recovered fast and ended up in 1500 plus. So 4500 points was the recovery. It's amazing. Anyhow, the Sensex is now almost near to the 2017 level. So there is room for going very high. But shall we invest or not? It will not fall or it will fall again. How far it will fall? Okay. Is it the start of a recession? Is it only the pandemic, the COVID, corona, whatever effect, or the economic situation? Actually, it is all mixed. The correction earlier it was happening every 10 years. Big fall it happened in 2008, then it was in 2018. Now, just after 2 years, we have seen such a big correction. As we observed, whatever happening in the American market and other world markets, it reflects here. And it's a global market. So whenever we invest, you have to think that you are investing in the world market. So any economic situation anywhere, it affects the market, affects the stock market, because now the product is distributed the whole world, customer is around the world, so it affects. Are we heading for a recession? Not yet. It's not the sign of the recession, but Sensex fall, the index fall is always an opportunity to buy. Your investment, you have to keep always 10% or 20% cash reserve, don't touch it. Balance 80%, you will have to distribute 20% for fixed deposit, 10% for gold, and 20% for expense. So balance 30% is for investment in stock and other mutual fund. So 20% of the money you get, the salary, net salary, can be invested into shares. Out of the shares, the one from the money that you have set apart for the shares, it is advisable to invest 40% in blue chip stocks, 40% in mid caps, good companies, and 10% in small companies, and 10% for your risk, 10 or 20 maximum, for so-called multi-baggers and trading high movement stocks. This criteria you will have to continue. So gradually you can build up the portfolio. Every month keep on adding the blue chip stocks. All the blue chip stocks, each one from each sector, that's good for the portfolio. Especially those who are now at a very low price, it's available. But don't think it will not fall again. It may fall again. No problem. It will, if the company is good, they will come back. If the company is bad, it may not come back. Instead it will perish. You will lose the entire money. Maybe before 1 or 2 years it was a stock was trading at 100 rupees, touched 100, it fell to 30 rupees, you think it will come back? No, maybe some more severe problems are there and it will go back to 10, 5 and finally get delisted. But in the case of big companies, the stock touched 1000 rupees, it went back to 300 or 200, but after some time it will come back unless there is a big serious issue like the issue faced by Satyam Computer or Yes Bank. These are big scams that is all happening in big companies. Such cases we will have to be aware of it, and you have to keep a distance when you get the information. All other companies, they are strong and they are giving good dividends, and the price appreciation is there, wealth creation is there. And keep in mind, it should be for 5 or 10 or 15, 20 years. You will have definitely a very good corpus at the after such a good period. All the best. Every fall of good companies is an opportunity to add, and every fall of a small company can be very crucial. Maybe you will have to sell off. If the company is not good, no point in keeping it and expecting that it will come back. Instead, book the loss, small loss, so that you will not face the big loss. Invest the money in companies where you can make profit rather than waiting for years. That money will be idle. Of course, it is good to take advice from professional experts, and your homework while reading is highly essential. All the best.